On what's going to drive equities higher from here?
Well, going into this year, we think we started the second leg of this cyclical bull market. We had a lot of uncertainty last year, fiscal cliff questions about the noise over the elections, etc., things in Europe. And we kind of walked into a clearing as we got past November. I think investors felt a little less uncertain, a little more certain about things, and were more willing to put a little bit of risk on the table into equity. So we had a really very low volatility move forward from November to a point in May. But now we've become a little more normalized. We played some catch up. Maybe we borrowed some return from last year that we might have had last year. And we're going to see a little more volatility now as investors worry a little bit about the emerging markets and worry a little bit about when the Fed starts to buy fewer bonds. And so but we don't think that volatility means the end of this market. In other words, we're looking for a 5% increase in earnings this year, and we think as growth continues and spreads to more industries and to more individuals, that PEs are going to rise over this year and through next year.
Let me ask you about some of the sectors you like. You are overweight discretionary stocks looking out. You're not worried about the uncertainty with the jobs market, which we know is still weighing on some consumers.
Yeah, the jobs market is coming back slowly. It is coming back, and consumer confidence and expectations have been moving ahead. They've been moving ahead better than investor sentiment, actually, and consumer spending has been moving ahead. And we think that's going to continue to be the primary driver for the cycle for now is consumers. But we also see some of our leading indicators for the industrial segment looking better. Building permits for the building segment of the economy is looking better. We'll probably see even some job growth in building this year, and even some banks that are starting to make some loans, do a little more lending. So we're going to have more breadth of growth in this economy, we think, even though it's not going to be rapid growth.